So let us take up the quiz now so that it becomes clear that what we have learned, we have understood and we can answer the questions. What is the difference between value of output and value added? What is the difference between value added and value of output? Remember the example of bread that we had taken. What was the total value that we had calculated? It was 1300 rupees. But what was the actual value added that was added in the various stages from wheat to flour to bread? So, in between whatever intermediate consumption takes place, when you subtract that from the total value of output, you arrive at the value that is added. So, intermediate consumption is the difference between the two. Next, product method of calculating national income is also known as value added method. Transfer payments refer payments which are made. Remember when we had taken up the transfer payments? When we were talking about personal income. When from national income you take away the social contributions and the corporate taxes and corporate earnings and you add transfer payments, you arrive at personal income. Personal incomes are the incomes in the hands of individual which they get. So transfer payments are payments that are not made because you have done anything in this year. It is because of the services that you have already paid earlier or which you have already given earlier. So what are transfer payments? They are made without any exchange of goods and services to workers on transfer from one job to another or as compensation to employees. They are not compensation to employees. They are not transfer income that are given from when you change your job from one place to another. They are given to you without any exchange of goods and services, without any production process. So transfer payments refer payments which are made without any exchange of goods and services. National income differs from net national product at market price by the amount of. Do you remember what national income was? National income is NNP at factor cost. And how do you arrive at NNP at factor cost? When from NNP at market price you take away net indirect taxes. By net indirect taxes, I mean indirect taxes plus subsidies. So, national income differs from the net national product at market price by the amount of net indirect taxes. National income doesn't include interest on unproductive national debt, income for government expenditure, the payments by the household to firm for the purchase of goods and services. Last, undistributed profit. We know in national income we do not take into consideration any unproductive element. So, interest on unproductive national debt will not become a part of national income. The rest of them are part of national income. The government expenditure that is done, the payments or the income that a household receives or the undistributed profits. All of them are a part of national income. Net national product at factor cost is also known as, you know this very well, NNP at factor cost is the national income. In GNP calculation, which of the following should be excluded? GNP, you know GNP is the biggest measure. What should be included? What should be excluded? Rental incomes, interest payments, dividends or government transfer payments? What should be excluded from it? Government transfer payments. They should not be excluded. They should be excluded, The most important problem of estimating national income is unorganized market, double counting, population rise, or income inequalities. Double counting is the most important problem of national income. Goods and services for final consumption are reduced goods, consumer goods, giffen goods, or none of these. Goods and services that are used for final consumption are consumer goods. GNP is GDP plus. When in GDP you add the net foreign income from abroad, you arrive at GNP, which is the biggest measure. Which of the following represents national income? NNP at factor cost represents national income. NNP at factor cost. GDP at factor cost is equal to GDP at market price minus GDP at factor cost. Factor cost, from factor cost to market price. How do you arrive at it? By subtracting indirect taxes and adding subsidies. So you minus indirect taxes. Transfer payments are payments transferred from central government account to state government account, payments made to factors of production by the organizer, payments made for no return service, or none of the above. Transfer payments are payments made for no return service. They are payments that were made because you had done a service earlier. Personal disposable income means personal income. From personal income you take away direct taxes, you arrive at the disposable income or the income that you can spend. So personal income minus personal direct taxes. National income estimation in India is done by CSO or Central Statistical Organization. NNP at factor cost minus dash is equal to NDP at factor cost. Do not get confused. This is factor cost, this is factor cost. Where is the difference? This is NNP and this is NDP. From net national product, how do you arrive at net domestic product? From national, you subtract net foreign income, you arrive at the domestic income. So, NFIA, net foreign income from abroad. GNP at factor cost minus depreciation is equal to, when from GNP, you minus depreciation, you arrive at NNP. Factor cost doesn't make any difference. GNP at factor cost minus depreciation is NNP at factor cost. The difference between the GDP at market price and GNP at market price. Again, the same that we had seen earlier. Earlier it was factor cost, this time it is market price. The difference between domestic and national is about net factor income from abroad. Value added method is used to measure. What do we measure by value added method? We measure national income. Value added method is also known as production method. National income differs from net national product at market price by the amount of NNP at market price. And what is national income? It is NNP at factor cost. So from NNP, you minus indirect taxes, net indirect taxes, you arrive at NNP at factor cost. So minus net indirect taxes. Which of the following is correct? Increase in the percentage of per capita income is less than the increase in the percentage of national income. This is correct. Increase in the percentage of national income is less than the increase in percentage of per capita income. No, national income has increased at a better rate in comparison to per capita income. Per capita income rises when population decreases. Per capita income rises when population increases. Out of this, the first one is correct.